Good afternoon. This is Eric Mashinsky with the Gold Investment Letter. It is Friday, November the 3rd, 2017. I'm pleased today to have asked a guest that I've gotten to know pretty well over the last year or so, Steve Osterberg, who is the CEO of Timberline Resources. Many of you have heard me talk about Timberline over the last 1 to 2 years. It's my biggest personal investment, first company I've ever filed a 13G on. I think a lot of you know that I'm bullish on the story, but I thought it would be really super helpful because a lot of you don't get the explanations and the color that I get, and being that I'm not a geologist, Steve is, and I think his insight into the assets that we're betting on it's really helpful. It's helpful for me, and I hope it'll be helpful for you. Steve, welcome.
Thank you very much, Eric. I'm pleased to be here and pleased to be able to have a chance to do this.
Great. So listen, I'm just going to let you roll. I might have some questions while you're going through the presentation, but why don't you just go through the PowerPoint for folks that are watching?
Yeah. Okay. Very well. Happy to do that. So of course we are Timberline Resources, and I'll just walk through this presentation and hit some highlights and then drill in a bit deeper when we get to some of the more technical stuff that has advanced in the story over the last several months. Cautionary statement, of course, all the normal cautions there for investors. We're always pleased to answer questions as they come up from investors as well, so always feel free to contact us. We are the key, I think, from an investment perspective with Timberline, or a couple of keys. We're very much a gold-focused company. We've got excellent advanced assets at the Tallapoosa project, and then a very nice pipeline of projects, mid-tier or mid-stage through an early-stage project that sits in our pipeline. And it's very much in our view a platform for growth going forward. We see our Tallapoosa project very much as a tier 1 asset. The state of Nevada right now is producing about 5 million ounces a year, and they are not being fully replaced. And we now recognize at Tallapoosa that, in fact, it's even got the size potential to be of interest to some of the larger companies, certainly the larger of the mid-tiers. And as such, we think with the work that's proposed and out in front of it and the history on it, it's a valuable asset. Again, all of our assets are Nevada-based. That's intentional. It's one of the great places in the world to be working today. Stable jurisdictions, the rule of law, all those sorts of issues are very much in play in the state of Nevada. Two of us really run the company. That's myself as president and CEO, and Randy Hardy. As Eric said, I am technical in background. I'm a geologist. Worked for majors, for juniors, and as well as doing a lot of consulting work in between. That consulting work covering the whole spectrum of the mining cycle, from early stage permitting and discovery up through permitting operations and working side by side with engineers all the way up through operations and closure. And Randy is our financial lead. He's our CFO and has been with the company for about 10 years. And has a mining and management history as well. Our other directors have broad experience on the financing side, and also high-level leading Orvana and discovery work with Paul Dirksen, as well as Lee Freeman and Paul Zink on the financial side, and doing a significant amount of royalty work in his background. Key thing on our capital structure. We have only 33.1 million shares outstanding, so we're still a very tight structure, about 53 million shares on a fully diluted basis. Of course, there are many metrics that could be looked at to gauge how one's value is rated relative to its peers. This particular slide, we're actually plotting the market cap of Timberline and other companies relative to the NPV of the key assets. And then in this particular metric, we're way out on the far right end as being positioned for the greatest re-rating potential. We could do this on a cost per ounce basis. As you'll see in a moment here, corporately, we're sitting on almost 2 million ounces of gold plus a lot of silver. and yet trading for about a market cap, or sitting at a market cap of about $10 million. So it's about $5 an ounce, and lots of potential for growth as well. So we see
Steve,
a lot of
sorry, I want to interrupt you on this slide. I think it's really important maybe to drill in a little bit on the slides. Two questions would be, what is this saying? So we're price to net asset value. What is that indicating as it pertains to your resource? And then one thing that I'm really interested in hearing your view on is, why does a Northern Vertex, ATAC, Rye Patch, Pershing Gold, I know they're further along in development, but some of them not that much. We have been through the PEA stage here. Why do you think there's such a valuation gap?
Well, I think a lot of it is a great question, Eric, and I think a lot of that comes to just the recognition of the assets within the company and the upside potential. And in a case like ours, we've got some assets that have been around for a while, but have not been fully recognized for what they are, and so that's part of our current effort to better get our story out there. And it is also partly the stage of the projects. All of those Northern Vertex, Rye Patch, Pershing, Golden Queen, those are all significantly, I think, a bit more. I think significantly more advanced than where we are right now. I think it's really probably a combination of those 2 points. Moving on, as I said, all of our assets are in Nevada. Again, a nice pipeline. You can see there the Tallapoosa project in the western part of the state within the Walker Lane Trend, which is a very hot exploration district right now, or trend. Our second asset, Eureka, there in the Battle Mountain Eureka Trend, one of the great gold producing trends in the world and in Nevada. And then Seven Troughs is on a structural break. That's also quite well understood and well defined. And collectively, again, about 2 million ounces. Most of this is within the Tallapoosa project. Tallapoosa is excellent. You can land at the airport in Reno and have boots on the ground on the property in less than an hour. And with that comes excellent infrastructure. They have paved highways very close to the edge of the property. And we acquired the option on this property in 2015, and having gone through our own due diligence process, we recognized that and believe there was a lot of upside potential on the project, as well as we very much appreciated the history, which includes this project having been fully permitted in 1997. And as such, permitting path has been laid out in front of us. It was designed as an open pit heap leach, very standard, very typical for the state of Nevada. And we took and basically freshened up the feasibility level data generated in the mid-1990s and applied 2015 cost factors on it, as well as introduced some significant new technologies, and put it back out on a PEA, which has very attractive metrics, as we will see in a moment. The plan then is really, as it stands right now, is really as a very standard open pit heap leach project, valley fill heap leach, waste rock dumps close by, a very tight footprint, which all fits very nicely with the excellent infrastructure very close by on the property. The economics in the PEA, we ran this at $11.50 gold and $16 silver. You can see here $136 million NPV and a 39% rate of return on around a 3-year payback. We're actually really much closer to the upside case, and the economics runs in large part based on factors like very low strip ratios. Initial capex is estimated to be very low, about $51 million, and about an 11-year mine life. So very attractive operation, at least at the preliminary economic assessment scale. The other great advantage of it is that with the historic permitting, the project as it stands today, according to our expert Nevada-based permitting lead consultant, is still valid on the federal side. There was a record of decision issued in 1997 or 1996 based on an EIS work by the BLM. That case has never been closed, and as long as we stay within that basic framework of the plan of operations, it remains valid. And with that, the Nevada reclamation permit, as was approved in 1996, is still valid. The state permits do need to be refiled and reapplied for, but there is really nothing particularly unusual by state of Nevada standards here. The maximum timeline there is around the water pollution control permit, and that's a little over a year. And then the county has a special use permit. And of all these permits, the only one that is discretionary is really the county permits. And the project sits within a county that has active mining at the Comstock Lode about 25 miles west of us, and a major project in the southern part of the county that would be a major open pit and underground operation. The state permits, back to those, are what have been described as non-discretionary or ministerial. And in the state of Nevada, the permitting law is so tightly defined that if a permit applicant meets the criteria as defined in the law for the permits, the state is mandated to issue those permits. They take public comments, but they are not mandated to even consider those comments in the decision-making process. So this project has a very significant upfront permitting advantage. The Tallapoosa project we control under an option agreement that was initially signed in early 2015. Requires us to, with an amendment completed last year, requires us to pay a total of $11 million in cash, along with some stock. We made the initial payments to where there's a $2 million payment due at the end of March of 2018, and then an $8 million payment at the end of March of 2019. We anticipate that payment would be covered under a construction finance package at that point. And what it really boils down to is it's around a $10 an ounce acquisition, and for that you acquire around 1.25 million ounces of gold and about 16 million ounces of silver, and with that a whole lot of data to the amount of around 90,000 meters of drilling, which if you went out to drill that many ounces today would cost you way over $10 million. So it's an interesting structure that we believe works for us as we move forward and advance the project.
Hey, Steve, let me also stop you on this one. So, you know, the frustrating thing for me has been that a lot of investors really are fixated on the option payments, and they dismiss the opportunity based on that. Just basically the bottom line is they don't think that the company is going to be able to pay them, as otherwise they would have confidence in that, and the stock would be rated higher, I think. But you know, we were able to pay off the option payment earlier this year, $1 million. The next one that's due in 2018 is for $2 million, and then the big one is the $8 million. So a couple things. I have my own thoughts on how this, you know, could play out. I think, you know, this is an ideal situation for deep pocketed or just a fairly well financed company to come in and earn into a significant percentage or JV by making those option payments and doing some work on the project. But you've made a comment about the construction finance package for later in this evolution towards the bigger option payment. Why don't you just elaborate on that? Like how realistic would it be that, let's just say, for example, the company moves forward. I know you're raising a little money now, do some work. We get into the early part of next year. You have the money, you get the money to make the $2 million payment. Talk a little bit about what it could look like to include the bigger option payment into sort of a package deal with debt and bank financing. And then what about the other potential opportunity of having a partner take something like this on? Is that possible?
Yes, yeah, both are possible in my mind. And to address the first scenario, as I see it, we need to spend some additional capital on the project to bring it back up to a fresh pre-feasibility study towards the end of 2018. And we may actually even be able to go straight to a feasibility study. The important component there is we want to be able to spend enough capital to bring the remainder of the inferred resource up into indicated status so that we can include that within the feasibility or pre-feasibility studies. And also we would be looking at some options for optimizing recoveries and pulling more ounces of gold and silver out of the project as we further de-risk it as it would move forward to that important milestone decision. I see it as at the end of 2018 or early 2019 on whether you would whether the project remains viable and whether we would want to proceed with that final balloon payment. If you look at the NPV of the project in the PEA at $11.50 gold and $16 silver, it's about $136 million. If you look at it on the basis of the upside case at 1,300, and granted we aren't there right now, but we're much closer to that, you're talking about an NPV of $188 million. It's way over an extra $8 million of valuation. And I think personally that's going to be very helpful at that point when we step out and begin talking to financing partners. And so that's how I would envision that happening. The other aspect, which trigger much sooner, is to engage or to bring in a partner, as you noted, most likely as an earn-in joint venture partner, which would help with all of the option payments as well as financing the work that needs to be completed to get us out to that important milestone decision point. There's a lot of interest out there in projects in Nevada. Companies are doing transactions these days. We certainly have spent considerable time evaluating opportunities and potential partners, and we continue to do that today. So I'm quite confident that we will have that option if that's the direction we decide to go.
Great, you can keep rolling.
Good. In terms of the capital there, as we noted, if you look at this relative to other significant projects out there, we are way down on the far left end of this curve. This is total capex over the gold equivalent ounces. Even if as we move beyond that scoping level study and go towards a pre-feas, the capex often grows in scenarios like this, and I anticipate it certainly could. But as it would also come with increased efficiencies in particularly in the recoveries. And so I don't see this ratio migrating very far to the right on this curve. I think we're always going to be on the lower end of this histogram curve. One of the reasons this project is so attractive is when you look at the grade of the project. We sit on an all-in weighted average basis at a little over a gram per ton, whereas the vast majority of projects are less than about 0.7 grams. And in fact, I think we have reason to believe that it's even better than the 1 gram. And the reason for that is when we look back at some of the historic data that was, in this case, it was generated by our predecessor on the project, Gunpoint Exploration, in 2011. And what Gunpoint had done is their major contribution to advance this project was to rebuild the geologic model, and then they drilled a series of 7 drill holes in 2 parallel fences across the heart of the deposit through the majority of the mineralization in the deposit. And for every sample they collected out of that, they ran what's a standard assay technique and got an assay number. And then they also ran what's called a metallic screen fire assay, which is the industry standard today when you have cases where the gold is relatively coarse-grained or large in size, if it's nuggets, in other words. And this particular project has had a history where people have recognized this, but it certainly has not been fully appreciated. And in this one-to-one assay comparison that Gunpoint did, it turns out on an average basis, and this is based on something like around 700 samples, 700 assay samples, so it's a significant database, but we average better than a 20% increase in grade reflective in this coarse gold. Now that becomes particularly significant if there's a mechanism in the processing to get it out. And the obvious way that coarse gold is usually recovered is by a gravity circuit. And it turns out historically, back in the late 1990s, the Australian company Newcrest had done some work on the project, just evaluating the opportunity, had drilled some holes, ran 11 composite samples to their metallurgical laboratory in Australia, and recovered approximately 32% of the gold on average by gravity from that gravity testing. That's really significant because that is in part purely additive to what you might recover from a normal leaching scenario. So it has the potential to get our recoveries up into really excellent numbers, potentially approaching or exceeding 80% in total. And with a head grade that starts as good as it is at better than a gram, it continues to make this project look better and better. Now, the project is, everything we've talked about so far is really about the Tallapoosa deposit, but the property block is much larger than that and incorporates a whole entire second zone called the Appaloosa zone. And as I'll point out in a moment, there's just excellent geologic potential for new discovery on that. But even on Tallapoosa itself, as we move into a little more detail, there is excellent potential for expansion of the resource beyond the 1.25 million ounces already defined. And really what the deposit is a series of very substantial quartz veins shown in the red vein zones here within the dark black line, which represents the pit shell modeled in the preliminary economic assessment. These veins are oriented in northwest-southeast direction and are positioned more or less subvertically. We know from the history of the project and talking to some of the people that had been involved in it for Miramar, basically what they did in 1997 or in the 90s is drilled this project up to where they got to a threshold or a milestone of about 1 million ounces. They reached that in their resource calculations, made the decision they had enough data in hand to proceed with a development plan under the premise that they would continue to drill and expand the resource once they were in production. So that's where it was left. The mineralization is entirely wide open to both the southeast and the northwest. And in fact, we have some drill data from the historic database in both directions. And these are as represented in these red oval shapes, represent all of the historic data we have in those areas. And there are 9 holes in each area, and every single hole has a significant thickness in terms of meters, as well as grade in terms of grams per ton of intercept, more or less comparable to what we see in the deposit itself. So we're in no position to make estimates on how much additional gold is in there, but it certainly has very excellent growth potential from these expansion targets. And that's on top of this coarse gold issue, which at 0.2 grams, simple math means you have the potential to add another about 200 to 250,000 ounces just from the coarse gold issue. So this project has the real potential to be significantly more than just 1.25 million ounces of gold as currently defined. And that's pretty exciting to me. We can also see this potential in the geophysical data. This happens to model up the resistivity data, which is an electrical characteristic, and in this case, very likely related to silica that has pervaded into the rocks surrounding the veins. And it has a particular signature that's very encouraging to us. And then up on the Appaloosa zone, the northern trend there, and this is a trend that's about 7 kilometers in strike length. We've done some rock sampling in the core of this area. We see channel samples, in one case there, running about 6.5 meters, running 5.5 grams per ton of gold and over an ounce per ton of silver, 42 grams. Other hand samples, half ounce gold, 17.4 grams, 105 grams per ton of silver, and there are 1, 2, 3+ gram samples in there. And effectively, none of this has been drill tested. The only drill hole that has properly tested anything in here happens to have been a condemnation hole by Miramar in the mid-1990s. Is related to their development plan. Down there in the south, in the lower left corner of this map, they drilled 24 meters of 1.7 grams per ton. That drill hole has never been followed up on. So it's a huge opportunity to find additional ounces very close by. And then we also know from the far northwestern end of this project that we have geologic indicators that clearly suggest we are at very, very high levels of preservation in this mineral forming system. We can actually go in the field and see relics of slabs of rock that have relic mud cracks in them, and slabs of silica that represent sinter, much like you'd see in the pools at Yellowstone. And this is all hosted within broken and fragmental packages of fragmental rocks that represent the eruptive vents associated with these ore forming systems. And normally in these kinds of deposits, you do not find ore grade mineralization at the surface. It's all related to the pressure and temperature conditions during the time of formation, which triggers in turn the deposition of gold and silver and even base metals at greater depth. And so there's a very strong, well known and established zoning in these kinds of deposits. And yet what we find here is at the surface, we'll find anomalous arsenic, mercury, antimony, which are all excellent indicators that you're above the ore forming system. And we even find in the historic data moderate levels of anomalous gold. It's not anywhere near ore grade, but it's a very, very strong indicator that the system was functioning and that there's an excellent target to be tested at depth. All this again sits within about 7 kilometers of trend length. And by comparison, the Comstock lode, which is hosted in similar rocks about 25 or 30 miles to the southwest, produced around 250 million ounces of silver and 8 million ounces of gold up through the early 1900s, mid-1900s. So this is a fabulous opportunity. None of this has effectively ever been drill tested. So we're very, very excited about the blue sky potential in this project. So what are we doing right now? What have we been doing? We just recently completed a metallurgical study that we've had running for around a year. It was really focused on evaluating the effects of leaching on a very fine crush through a new technology that's available today called high pressure grinding rolls. We've done some testing on separation of the ore into different size classifications and leaching them separately, all of which is really designed to confirm that we can in fact reach the recoveries as estimated in the scoping level study, the PEA, and the results of which very much have done that. But the whole study has also brought into focus further potential for recovery of this coarse gold, particularly if we went to a different leaching technology and put it into a vat system or some kind of tank related system. So we're doing some additional work on that right now and talking to expert consultants to evaluate how we would establish and design the trade-off studies going forward once we continue to drill test. As Eric said, we do need, said earlier on, we do need some capital to move us forward through this. Basically, we're looking at about a $7.5 million work budget to get us through 2018, which brings us up through that critical decision point of a pre-feasibility or may even be a feasibility study with trade-offs involved. Some might think that schedule is very aggressive, but again, I'll remind you, this project had been fully permitted and ready for construction all the way up through feasibility and design level back in 1997, and much of that information is still of value to us today and will help us to accelerate forward to meet that milestone. And that's Tallapoosa, but it's not the only project we have in our portfolio. We also have our Eureka project, and I'll just add, this is the project why I actually joined Timberline back in 2012. It's a very large project sitting at the southern end of the Battle Mountain Eureka Trend, and as such, it's got a great address. It sits immediately south of the Ruby Hill and Archimedes mine complex that was operated for years by Barrick and predecessors, and is now owned by another firm and is sitting largely idle. But the Eureka project has historic production on it. In fact, one of the very first heap leach operations in the state of Nevada was called Windfall. That sits in the northeast corner of our property block. And also there was production at an area called Lookout Mountain. And when Timberline acquired this back in 2010, they initiated work and focused their work on the western side on the Lookout Mountain trend. It contains about 650,000 ounces of gold in measured and indicated, most of that in measured and indicated as shown, and some in inferred. That resource is open in both directions along strike, to the north and the south. It also have some opportunities at depth as well. And in fact, at Lookout Mountain, one of the targets that we finished the last phase of work on back in 2012, actually it was follow-up to work in 2012, in late 2014, we drilled a small program of deeper holes, so running about 1,000 feet, 300 plus meters, and intercepting relatively high-grade mineralization. As you can see in the table on the left there, it represents what the assay intervals tend to be. Multiple meters running anywhere from 5 to, in some cases, well over 10 grams per ton. These are the sorts of intercepts that are often now being identified in significant deposits that sit at depth beneath the major Carlin system mines that are in operation or have been in operation in the past. And we feel very excited about this because there's a very long strike length on the resource area that we have, and that mineralization is being fed through relatively high angle structures where they transect through layers of rock that are receptive for deposition of gold mineralization. So we have excellent targets there yet to expand that. We'd welcome a partner in on this who would be able to finance the deep drilling and to begin to test the numerous targets there. And then on the Windfall target area, I'm really excited about this because also in late 2015, late 14, early 15, we did a very small drill program in here of 6 holes with the data as represented on the side there, and also intercepted some very nice high-grade intercepts. This drilling very much validated the historic drill intercepts that we have in our database that represent areas that were not mined historically. And so we see a great opportunity to really grow a significant resource here with relatively minimal expenditures. And we also see the same sort of high-grade structural targets in this package of rocks, as well as these high-angle structures cut through the receptive and attractive layers of stratigraphy at depth. So there's lots of work to be done here yet, but great opportunities to really identify a very substantial project. And then finally, we have this early stage project in our pipeline called Seven Troughs. We hold this property, have done very little work on it, has low holding costs. It's very early stage but very attractive. And in the early 1900s, this property produced around 150,000 ounces of gold as historic production from narrow high-grade veins at depth, underground operations. producing at over 1 ounce per ton of gold and 4 ounces per ton of silver. We've done some work on the surface to tell us from a geologic perspective that we are sitting very high in the geologic system, much like the Appaloosa zone, and we'll continue to hang on to it unless or until we find the time and have the opportunity to put capital into this and to begin drill testing some of our preferred targets there. So those are really our assets. We continue to be very excited about them. We believe very much that Timberline is a very attractive story still and going forward. It's about location, it's about the assets, and really about our valuations. And we think the story is quite unique. So we're very pleased that you're involved with us and ask that you continue. Thank you very much.
Beautiful, Steve. I think you went through pretty much everything I needed to circle up on. I had a few questions, but they were taken care of in the presentation. So for brevity's sake, we'll wrap it up here, and we'll make sure to publish this for our premium members on Sunday night, Monday morning, and then we'll give them a day and release it to our free members as well. So thanks so much for your time, and have a good weekend, Steve.
You too. Thank you, Eric. Appreciate it.
Cheers.